Okay, hi everybody. I don't have my boxing gloves on, so bear with me. But we've got a lot. Oh, this is great. We've got a lot of people here, and this has been really awesome. We've had a lot of people reach out, email, text me, call me, and say that they're not able to join at this moment, but had a lot of questions around this topic. So I'm really excited to dive in. And as we go, so I've kind of structured this based on the questions that I've received from people that aren't able to join us at this moment, which makes me think we're going to have to continue this on a higher scale. But definitely, if you want to put something in the chat, I have somebody monitoring the chat. So if you guys have a specific question, a lot of you aren't on camera, so just type it in the chat, and we'll kind of jump to it. But this is such an important topic to me, investing. And one thing that I always like to say is that money is on the other side of fear, right? So, like, we've got to get over our fear to get to the money. So, everything in life revolves around mindset. And we're not going to really go into a deep dive on that today because we don't really have time for it. But I've learned that if we can get over our fear a little bit to that other side, that's where things really get interesting. So, the other thing that we don't always have in our back pocket is the education around investing. Um, I was fortunate that my parents, it was a kind of a non-negotiable that when I graduated from college, I had the ability to move home for a short period of time, but the goal was that I was just going to buy something. Like, you've got to buy something and you've got to move out. So I didn't really think there was any other option for that. So I bought real estate pretty young in my life, and then I had the opportunity to get involved with real estate, 22 years ago. So I've had access to information that I don't think a lot of people have. So, but what I want to talk about is wealth building, because investing equals wealth building, and the world's wealth was built in real estate. So if you think about being wealthy versus being rich, there's a difference. Anybody could be rich. Anybody could have a great job, and you're making X number of dollars per year, and you're driving the fancy car, and you have the big house, right? I've seen this in the real estate market back in 2006 when everybody was flying high, and then in 2007 when things started to crash, the rich people, things started to change for them, right? Because they weren't wealthy. They didn't have passive income. And the way that I describe wealth is really it's your freedom number, right? You have the ability to do what you want with who you want to do it with, when you want to do it. So when you wake up in the morning, those 2 feet hit the ground, you're not worrying about money, you're not thinking about it, right? And so the thing that we have to focus on is sometimes when we're living in the moment, we don't think about 5 years down the road, 10 years down the road, 15 years down the road. So the way that I have built wealth is in real estate, holding real estate over time. Because this is not a hedge fund bet. It could be. Real estate could be a hedge fund bet if you're flipping at a high level, right? So the type of investing that I want to talk about specifically today is the type of investing where you buy property and you hold it over a long period of time. And the advantage of doing that is there's going to be highs and there's going to be lows. So the components of this are you have to first work backwards, right? Because the purpose of a goal is to know how to act appropriately in the moment. So what is your freedom number, right? People go, oh, that'd be great to win the lottery. If you've ever studied the lottery winners over time, right? Because they took that money and they never made it into passive income. They just spent it. And then their lifestyle couldn't support it over time. So what is your freedom number? So let's start there. Let's work the numbers backwards and put some time into looking at what that could be. If that's too big of a number for you to digest, have a smaller goal in mind. One of the goals that I had was when my kids were in college, which is a handful of years away, I had a passive income goal that I wanted to achieve. And so a lot of you guys, a lot of the questions around this particular topic, kind of surface from, hey, Carie, how are you cash flowing college? Like, what does that look like? And you kind of have to work backwards. Like, I have twins, so college times 2, same time. So I had time to prepare for this. In fact, when I found out I was pregnant with twins, that was the first thing I thought of. College And so I've been working backwards on that number for a while. And so you just have to figure out how much money do you passively need, right? And then you break that down into cash flow, right? And all of that. And then you can figure out, right? Then the numbers become real. And so if we could figure out what that looks like, and then the beautiful thing about the company that I've aligned myself with, Keller Williams, Gary Keller has built his entire company on models and systems. And so one of the beautiful things about our company is this is a beautiful model for investing in real estate. And it's called the Millionaire Real Estate Investor. And what Gary has done beautifully is he has stood on the shoulders of giants who have come before him, and he has put together a complete plan based on all the successes of other people. So he had a model, and then he built a system around it. And it really falls into three key components, and I'm just going to share those with you, and then we can jump into some specifics. Number one is criteria. Number two is terms. And number three is network. So once you start, right, first is criteria. Well, I should say before we have criteria, we have what is the number you want to achieve? What is the passive income number that you want to achieve? And then work backwards on what that looks like. I had a goal of like one investment property per year up to a certain period of time to make sure that I was achieving that passive income goal for college. So criteria is what do you want to buy? Number two is terms. How are you going to buy it? And number three is network. Who is going to help you? Because in life and real estate, it takes a village. So you have to start somewhere. Oftentimes people say, oh, I don't have the money. And it's like, well, hold on. We're not even talking about money yet. Let's figure out how much do we need, right? What are the criteria that would make that? Then we talk about terms, and then we talk about network, right? And so that's the process that you go through, because one of the biggest challenges, I've been through this, a lot of my investment clients have been through this, is they miss out on that deal. And then they kick themselves, right? And that's the number one way to figure out how you know you're ready, is when you have, you're like, okay, I'm going to do it. And then it's gone. You have to be ready. And that takes time and experience and working through all that. So criteria is really important. I will just tell you a little bit about myself. A lot of people ask me to share my investment story, history, so I'll talk a little bit about that. And it's a criteria that I work with going forward because I think it's kind of the path of least resistance when we talk about investing. I told you earlier that I was blessed that my parents sort of made me buy a house. I didn't even think there was another option. So I purchased a townhome pretty young, not that long after college, and it was back in early 2000s when the market was flying super high. And I paid, when I look back in time, it's actually worth now about what I paid for it, right? I mean, to be honest, because we've gone through foreclosure markets, up markets, down markets, we're not going to care about that at all in this scenario, right? Because what I did, of course, is pay it off. So when I got married, I had enough knowledge to say, you know what, I'm going to hang on to this townhome. I think this would make sense for me to rent this out. And so I did that. And I've rented it for a really, really long time. There was never a time that I didn't have money. There was never a time where I was spending money on it, where I was in the hole every month. I mean, it might have been like negative $10 a month here or there, but I was always pretty much break even, and I just hung on to it. And I thought, just, over time, right? And then I'm like, ooh, now the market crashed and then it recovered, and I was starting to have a little cash flow, so I bought another one, right? And, one of the things that we always joke about with investment property is we say, do you know the best time to buy an investment property? And people are like, they're like, can't wait for that secret answer. And then I say, well, it's 20 years ago. That's no fun. But the good news is that the second best time is today. Because when, it's time on task over time, right? So that you have to invest, and then that money compounds. The reason I love real estate as an investment tool, I'm 100% real estate invested. Of course, I have a 401k and things like that. But the unique thing about real estate is if you look at it over time, right, we're talking long periods of time, it returns a little bit better than the stock market, generally speaking. But what it also gives you is land. You have an actual asset that is worth something, that also provides an income for you, a cash flow opportunity. So for me, it's kind of a no-brainer. Now, if I bought something and then I wanted to sell it 2 years later, depending on the market fluctuations, if my equity position wasn't super strong, would it be the best investment property? I don't know, maybe yes, maybe no, if you timed it right, if you bought low and sold high. But that's not what I'm talking about here. I'm talking about a long-term investment. And so with that townhome that I bought, it's an easy way to get started, and it's often what I recommend for first-time investors. You've got a property that is being managed for the most part from the studs out, right? Like you've got an HOA where you're not worrying about some of the big ticket items like the exterior, the roof, taking care of the lawn, right? It kind of runs itself. You depending on the cash flow on that, could be, you're paying that HOA, so you have to kind of balance what that looks like for the cash flow opportunity. But it's usually pretty much a plug and play, and you can figure out what that looks like. So that's a criteria that's really easy for first-time home buyers, or first-time investors, I mean. Also thinking about your own home and how that could be also an investment property. All of our first-time home buyers, we advise them, whatever you buy, make sure you can rent it. If you buy a townhome that you can't rent, I'm always cautious about that. I say, you know what, that's okay, but think about what that could mean for you over time. And I tell them about what happened to me and how I've been able to now have this great cash flowing asset that I own free and clear, right? And I would have never had that opportunity when I bought that if I couldn't rent it. So always thinking ahead and advising, I know we've got realtors on here, we have, our clients on here, they know, our clients know, we always talk about make sure you can rent that, or what does that look like to rent it, or, could you live in it and rent out part of it? The golden ticket in investing is buying a duplex, right? Having half of it where you live, the other half you rent, and that person that's renting is paying your mortgage, right? So there's so many different opportunities that we can look at with investing. Of course, I will mention a little bit about flipping because that was one of the topics that a lot of people ask me about a lot of times. Flipping to me seems a little more hedge fundy. It's, you've got it. It's a little bit bigger risk. The reward could be great. I can tell you in our extreme sellers market that we're sitting in right now, you've really got to insulate your equity. I mean, you're going to have to buy below market value to really ensure that you've got enough margin to get that flip in a position where you're ready to sell it again. When it's a more balanced market or more of a buyer's market, flips make a little bit more sense. For me, I like a less risky investment, so I know that I don't care so much about what the price of the place is, right? That doesn't really mean much to me. Like right now we're sitting at about historically about 7% above our trend line for where home prices should be. So we are a little inflated. It doesn't bother me. I'm thinking about what is this going to cash flow on a monthly basis, or can I put my cash flow into it and pay that mortgage down in half the time, right? So those are the things that we look at. And sometimes people think, oh, it's not a great time to be an investor. Not the case. Every day is a great time to be an investor if you plan to keep that property over time. Even an investment that doesn't change, even an investment that doesn't increase in value. So like I was telling you about my townhome, right? What I paid for it, right? It dumped right when the foreclosure market hit. I mean, it was awful, right? So like, I'm trying to remember what I paid for it. It wasn't much, but then, like 30 to 40% value dumped, right? But I didn't care about that, right? But today, I don't really pay attention to the value of it. I just know that I am free and clear a decent amount of money that's going to help me cash flow the life that I want to live. So there are some people that are doing this at a much higher level than me, or some of our clients, right, that have, we call them doors. They own 10 doors, 20 doors, 100 doors, right? Like that's big game investing, and you can get really creative with that. But what we noticed with our clients and the questions that we're getting was how to enter the investment game, right? So I don't want to overwhelm anybody by this, but we can certainly go higher level in the future on what that looks like. But when people say, oh, it's not a good time to be an investor, I mean, look at the market. It's actually probably one of the better times that I can remember to be an investor, and here's why. First of all, 89% of all the mortgages in the United States have a rate of 5% or less. 5% or less. That's a staggering number. The other number that's really interesting to look at is 40%. 40% of all the mortgages in the United States really are zero. So 40% of the homeowners own their homes free and clear. 40%. That's staggering. So basically, what you're sitting on, 40% of us are sitting on, 40% of us on this call, for statistics' sake, are sitting on a good amount of equity. Well, there you go. It's called a HELOC, home equity line of credit. You get that set, and you've got your equity sitting right there. You don't have to go through a mortgage process. You don't have to get a loan. The fees are far less, right? You're obviously going to have to pay, you have to pay interest on the money that you borrow, but there's really no closing costs. That money can be in your hands in 3 days, 2 days. That's considered a cash purchase for the person that you're buying from. So what's the downside here, right? Like, think about if you pulled that equity out, right, and you had that money ready. We've already determined number one criteria. Let's say you're going to enter the market, you're going to buy a townhome. It's going to be an easy, kind of a no-risk investment. And then there's your terms. Boom. You've got your 20% ready to roll in your home equity line of credit. Number 3, network. That's when you consult a professional who can bird dog these opportunities for you and make sure that it makes sense. So those are really the 3 biggest things when we look at investing. And, over time, it's unbelievable how creative that you can get. You could buy that property, you could pull the equity out of that and use that for buying your next property. There's a BRRRR method. I mean, there's all kinds of things that you can do to be creative. And here's the best news. You don't have to, start earning the income when you retire, like a 401k or an IRA. If you sell it, you sell it, right? It's a piece of property that many people would want to buy. So it's not like, cashing in on paying the penalties to cash in on a stock market product. This is something that you have, right? That you can play with over time. You could 1031 exchange it. I did play around with that for a while too. If you took that property and then to save on taxes, you just exchanged it into a like-kind property. But I will tell you, when you get into the investing game, right, then it starts to snowball and it starts to get exciting. And then you ask yourself, well, what can I do? What else can I be buying? What else? There's so many different opportunities with terms that, you could go in with a group of people. You could crowdfund. You could do a REIT, right? But I think what we fail to do in our society is really educate ourselves. We're such a now. We don't think long term, and we're not really taught to think long term. Had I not been interested in real estate, I fell in love with real estate when I bought my first house, my first townhouse. I thought, this is phenomenal. What a fun career. So I plugged into this backwards. So I got lucky because I had a little bit of education in parenting, right, that led me to buy something. And then I had a plan and a system for how I could do it. So it's just so often nobody thinks about it. We don't teach this in school, right? There's no investing in real estate or investing, outside of the stock market. And when you really start to dive into it and figure out what people are doing at a high level, it's really easy to get in. Anybody can get into this, really. It's the terms should never be a barrier. I promise you we could come up with a bunch of different creative ways to make it work. And then, start with the end in mind, right? So what does that number look like and what can we do to get there? And, it's been fun for us at Holzl Homes because we have so many clients that are curious about it, started the journey, and then they've built a huge portfolio. And so really we want to educate everybody out there about the opportunity that we have to buy investment property, especially in this market, especially with the equity position that we have, right? And I wanted to point something else out to you. Just, I've given you just a really sort of down and dirty framework, right, with the criteria, the terms, and the network. And I mentioned it earlier, but I want you to really think about in this extreme seller's market, right? We know we had a whole rumble on how to win the house, how to be the buyer that wins the bid. And putting down cash, if you pull money out of your HELOC, is a huge win. Not to mention, if and maybe you only have enough equity in your home to put down the down payment, 20%, right? You're still at an advantage then over other buyers who don't have a 20% down situation. So there's so many different things that could work into your favor with all of that. So I know it's kind of a lot. I just wanted to line that up for you guys. Does anybody else have any questions? I know we had a few. Anything else in the chat that if anybody wants to chime in and ask any questions, would love to talk about it or address anything. Okay, all right. So the only question left is, when are you going to buy your first investment property, right? How easy is it to get over the fear? I think that should be our next rumble, because that's actually what holds most of us back. Oh, I have a question. Oh, Jay Dro. Oh, Jennifer Drohan. Yes. Do you recommend for? Absolutely. I have an LLC. So the question is, would you recommend doing a trust or getting an LLC? Yeah, because that's protection for you. So if, let's just say, for example, now, I'll be honest, I've been renting for over 20 years. I've been very fortunate. I've never had anything really too bad happen. But for example, should something have happened with, let's say, one of my renters tripped on the ice and sued me, right? The LLC protects you from your personal assets from being brought into any kind of a lawsuit or something like that. So 100%, and LLCs are so easy to form. Not to mention it keeps the accounting really simple. And yep, I would do a separate LLC. Yeah, I have a separate LLC. So I have a business S corp, and then we've got an LLC for the investment properties, and it's super easy to do. It would not take much time, and then it just keeps that accounting piece. They roll up together, but yeah, it is separate. And the other thing too, with LLCs and S corps and that kind of thing, you want to make sure that the LLC has a name that's not really tied to your real estate business, so it keeps it kind of private and separate. So that way you don't have to worry about, it's just that nice kind of line in the sand as a separate entity. But yeah, all right, cool. Well, I'm really passionate about this because, this is something that I'm, grateful that my parents kind of got the bug started with me with home ownership. Right now I'm taking it to the next level with my own kids and really figuring out, how is this going to look for them? How can they change their entire future by getting to that freedom number much earlier than I ever did. And what a gift, right? It's such a gift. So I am always here. Our entire team is here, devoted to you guys. And if there's anything that we can do to help you get that investment journey started or taken to the next level, we know how to do it. So thanks for joining me for this rumble. I was so happy today to talk to all of you, and can't wait to see you all soon. Thanks.